What's up, everybody? Bobby here. Another episode of Simply Investing. I actually got my access to this channel back. It's been almost, I think, like 7 years since 2015 was my last video. So a lot has changed since then, and here's what I've been up to. So I was starting a business then. It was a mortgage lending company. It was doing really well till I had some bad partnerships, right? It didn't really work out the way I wanted it to, so it ended up kind of we had to shut down. Just didn't have the capital to keep doing what we were doing. We're kind of doing like some buying properties, doing rent to own, and a lot of other craziness that I'll go down into much later. So after that, though, I did make a little bit of money from what I was doing, and so but I went into back into corporate America, into retail. And I did very well. I was making $280,000 a year. I think my last year I was about to make about 400,000. But like all things, I did get a little run through corporate America. I did get uh, let go. So that was kind of a fun bit. But in the meantime, I was investing and stacking my money. So let me tell you what I did after that. And that was 4 years ago. So after that, I started a moving and delivery business, moving into logistics. So now I'm 4 years later. I'm here. We're doing this, and we're doing a detailing. We're kind of working together as a family. Everybody's pitched in for it, so it's not great. It's not great, but we have been making it. So, needless to say, it's a 8-figure business. It's valued at 8 figures, is what it got assessed at for taxes this year. So, this is what I've been doing. But investing now, I was starting before I really got into cryptocurrency, and I guess and it's like I stopped 2 years before that wave. I have another channel which I'm probably going to is Sally Investor. I'm going to change it to Crypto Bobby, as I will just talk about crypto stuff over there, and I'll do all my investing stuff here for you guys. So, but through the whole time now, we were, thinking long term, right? So when I was at that company as a regional manager, when I was in that sales company, right, I was making, I would say, average $300,000, right? That's a lot of money, right? So what I was doing was I was putting stuff into rentals, and but the thing is that everybody around me, everybody I saw, everything I saw on YouTube was going into rentals and going into high end rentals. I do not do high end rentals. I said, you know what? I'm going to go right to the average Joe. I looked at all these. I mean, this area. I moved out to Arkansas. Let me tell you something. Houses here are like 100 to 150,000 for a very decent home. About 2,000 square feet, 3 bedroom, 2 bath, 4 bedroom, 2 bath, 4 bedroom, 3 bath. 4 bedroom, 2.5 bath. You know, but they're very decent homes. Nothing wrong with them, but nobody wants them. They're old. Some are from the 40s, 50s, 60s, 70s. There's a few from like the 80s, 90s, and 2000s, but nobody wanted these properties. Not a single like these. Nobody wanted them. Why? They were all building these nice modern. Now, don't get me wrong. These nice modern new houses, very fantastic. And there's an economic home builder here that builds homes for cheap. I mean, they're getting mortgages for like 600-700 bucks on these properties. They're nice homes. They're made of that. It's like that fake stucco building material. Like you make a mold, you spray it in, and you kind of shave it off. Like it's terrible. You gotta be careful as a mover moving into those because you can knock the whole wall down. But they're cheap homes. They're not great, but they're cheap. And they were retailing for like 100,000, 110, right? So I just started, I'm buying up these properties, and I'm only renting them out. 800, 900. Now probably 1100, 1200. Like they didn't go up. Like there's people in there that have been in there since 2016. I'm not raising their rent. They paid every month. Their regular pay. There's no need to raise it. I renovated it. But now that same property that was $98,000 is now 244,000. So like my entire portfolio, poof, doubled. Now here's the thing, and this is the thing that people say. It's like they're like, oh well, you take loans, avoid cash. No, don't do that. Don't do that. Don't do that. I use cash to buy assets, and then I build up cash flow again, and I repeat the process. But when you're buying your rental properties and you're constantly taking out a loan, it's constantly going up for loans, getting refinanced. The bank, I mean, that's a bubble waiting to happen. I don't like that. If you're going to borrow money, never borrow more than 10% of what your assets are. So if you are a property management company, unless if you're borrowing like 40 million to build like 1,000 unit apartment complex, there really is no need for you to keep withdrawing the money. But we have 98 properties, and let's say the average um the average thing is about 1050, because some are 8, some are 9, but it's about average 1050, right? So 98 times 1050, so you're looking at $102,900 per month, right? Now you got to cut that in half, because out here in Arkansas it fluctuates. Like, you'll have warm winters, ice cold winters, warm winters, ice cold. So odds are you're probably going to spend about $20,000 to $30,000 replacing pipes, water heaters, stuff like that, or air conditioners, because it gets insanely hot. So those things break down more frequently. So you have to save money set aside for that. So at the end of the day, you divide that by two. Like, I'm making $51,000 off of that, right? So that goes into here, and we're just like funneling cash into this business and growing it, and doing the things. But I wanted to talk about, what I really want to talk about is like why I became an entrepreneur here. I wouldn't really consider myself an entrepreneur. Just really, just we're a family that owns businesses, and that's all we really do. Because an entrepreneur changes the way society goes. We're not that. We're just not. We're just doing something that's, we're doing a little better than some people are doing. I'm not going to go into details of it, so no need to ask. But we do it a little better, and every day we try to do it a little better than we did the day before. But at the end of the day, like, I probably could have been better off staying in corporate America than running business, because it is stressful. I think the last 3 years I've had hardly anything to eat. I was like 500 pounds, and I dropped down to 350. I'm trying to lose weight, but I'm still going down there. But it's like, it's crazy, because it's just the amount of, like, your credit score goes, you're selling off assets, everything. Like, your accounts will be at zero for the whole time, and you're starving, and you're frustrated, you're angry, you're pissed off that things aren't going the way that you want, and you're trying to figure it out while still being hungry. So that's when I came to the realization that what we had, or people were saying, oh, there's recession, there's recession, there's recession. No, what we had was a entrepreneur bubble, and it burst. The money disappeared, the free money disappeared. Now it's bursting. Because now I'm seeing these very nice houses that we moved clients into 2, 3 years ago. They're on the market, and they're selling for less than what they bought it for. The mortgage on, I'm looking at the liens. You can go to any title office if you're curious and see how much money is left and who holds the lien and all that. So it's underweight. I mean, we're talking like $100,000, 200,000, because these people were buying this stuff in straight cash, in straight loans, not cash. People were putting down like 3%, 5%. When really, if you're gonna buy like $800,000 home, you might want to put 25, 30%, because if you buy it at 800,000, it drops to 500. You're not underwater with your mortgage. But at this point, you might be. A lot of people might be um, underwater with their mortgages. But I'm seeing it, and there's a very nice community, and I knew a lot of people I networked with here. Stuff's getting put up on the block, and it's like I said, it's like Warren Buffett said. Like, you see the water, like when the tide runs out, you see who's naked, who's been swimming naked. And let me tell you something. I did not realize some of the people I was networking, because like, there was a guy, he was really big into real estate in the area, and I was trying to get business with him, because we're trying to network. I'm trying to have his agents. Hey, we can do cleaning, we can do junk remove, we can do all this stuff for you. Blah blah blah. We're trying to hustle, hustle, hustle. Pandemic hits, and before the takeoff of the home market, all of a sudden, his Lambo's up on the market, his Corvette's up there, his Bentley's up there, and I'm like, okay, this guy was just living off of credit. But once the credit kind of froze for even just 4 weeks, he was done. So his agency is gone. And, it's like, you don't want to be in that situation. And I took that as a learning lesson because, like, I don't want to be in that situation. So even if I get any modicum of success, I should pull it back a little bit and say, hey, look, I got to wait till I hit a certain level to get the assets that I want or get the things that I want. We all want nice stuff. I would like a nice house. I'd like to move back to New York City at some point, but I can't do that. Even if I have a $10 million a year business, I still can't do it. Even if I have a $100 million a year business, I can't do it. It would have to be somewhere around $1 billion for me to be able to move back to New York City. And me moving back to New York City may never happen. It may never happen. And I have to say, hey, look, that's my goal, but it may never happen. My goal in the short term is try to get this to work. So, but with that, it's just crazy that this kind of scenario is happening. I'm seeing fancy cars go back on the market, not to mention the crypto. This, like, real estate's coming down slowly, but it's not really crashing. It's just going back to normal. But the supercar market, it's crashing. I've never seen Lambos, Rolls Royces, or anything on a freaking Facebook Marketplace, and they're on Facebook Marketplace. I'm probably gonna do a video about that too, because I also got a good video about Carvana because I was not only was I a customer, I bought a Mercedes off of them, but I also am well versed on what they were doing with their stock. So I want to do a good video on that because Carvana is a good segment as to what's going on in the economy. Now, everyone's saying there's a recession. I don't think there's a recession. Goods still moving, industry still moving, products still moving. Like I'm looking on the highways like truck, 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 even with a driver shortage. So I know for a fact that we might be going down to normal levels, but we're not at this economic boom, free money system here. So, with that being said, you guys got to pay attention, stay close attention to what you're doing and what you're investing in. And right now, this is a desperate time. So, if you're sitting here trying to find a quick get rich quick scheme, all you're going to run into is either you're going to run into a Ponzi scheme, you're going to run into a get rich quick scheme. You're going to lose your money. I had a guy. There's a friend of a guy that works for one of our companies here that is paying someone $40,000 to set up a Subway franchise that isn't associated with Subway. I hate to say it, but that's a scam. That's a scam. It's gone. It's Fugazi. It's gone. You know, I hate to say it, but it's just gone. And what you guys gotta realize is all of this fluff that you see on YouTube and Instagram, they don't own any of it. Most of them, I'd say 95% of them, don't own jack shit. Because, like, the stuff I saw 2 years ago, I see it now on Cars.com. I see it in exotic dealerships. I see it at auction sites. I see these same YouTubers posting their stuff under their real name on Facebook Marketplace. I'm telling you right now, that whole bubble crashed. It's gone. If you're trying to think you're going to make $1 million a year as a YouTuber, it's probably not going to happen. Now, you can use YouTube to expand your brand or use it for your business or do whatever you want to do with it, but it's not going to be a good thing for you in the long term. It's a good side hustle, not a main hustle, unless if you really hit a niche, I guess. Because there's still great entertainment, there's still people who can do it, but the free money where everybody could do it is probably ended. Probably has ended. So with that said, I want to say, hey guys, I'm back. Like and subscribe. Follow me on Twitter. Follow me everywhere. I'm going to try to do at least 3 videos a week on this channel and a video a day on my crypto channel. Because crypto just kind of fluctuates all the time. But remember, respect the process. Respect the process and remember, I'm going to add something to that. You can never get rich quick. No matter how hard you try, you can never get rich quick. And the people that do are become poorer faster than they got rich. So just remember, stay safe out there. Respect the process. Only invest in what you understand. And as always, I'm not a financial advisor, but I am a broker. And I was a broker. So I see things as a broker, not as a financial advisor. If you need that, go seek financial help from any service. You got Edwards, you got all any of the banks offer it, Merrill Lynch, JP Morgan, or just find a guy locally that does it. With that said, stay safe out there, respect the process. I'll be back.